he's a terrible Fed chair. I was surprised he was appointed. I was surprised, frankly, that Biden put him in. Accordingly, it is my pleasure and my honor to announce my nomination of Jerome Powell to be the next chairman of the Federal Reserve. Congratulations, Jay.
Thank you, Mr. President. I mean, I brushed my teeth retarded. I rode bus retarded.
Damn.
In a weird way, I had to sort of just free myself up to believe that it was okay to be stupid or dumb.
To be a moron.
Yeah.
To be moronical.
Exactly. To be a moron.
An imbecile.
Yeah.
Like the dumbest motherfucker that ever lived.
Good morning, good morning, good morning, good morning, good afternoon, good evening. No clue what time you're watching this, but we are going to keep this short. And yes, as the world turns with the drama. I first want to say thank you. Thank you very much to those of you who took the time out on Saturday. We did those one-on-one calls. And again, the purpose of why I do these one-on-one calls, which you will find if you search that there is nobody who does this, is because I am the only other person other than yourself that's looking out for your financial freedom when it comes to trading. And I will do everything in my power to make a trading plan that fits to your lifestyle if you do not want to change your lifestyle to become a full-time in front of 2, 3, 55, 65-inch TV screens throughout the course of the session, sleep in your office like I've been doing for, I don't know, almost a decade now. I'll do it. And again, I appreciate your time. But anyway, moving forward, earnings this week. This is the first of the two big earnings weeks, and this week is highlighted on Wednesday after the market closed with Tesla and Google. I'll go over those really quick because this isn't going to be a very long video anyway. An interesting one will be on Monday morning with Domino's Pizza. Domino's Pizza, look, say whatever the hell you want to say, but Domino's Pizza being kind of your litmus test for the, expendable lower middle class. We'll see what kind of report they put out for their earnings. And then you've got the yuppies over here with Chipotle Mexican Grill. And I'm sure I offended probably 4 of you by mentioning that. But Chipotle Mexican Grill reporting as well on Wednesday, and we'll see what they put out. And that pretty much highlights it for the week as far as big names. I know some of you trade ServiceNow, IBM, Intel, whatever it is. If you've got a stock that you like and you want to look at and you want to trade, all you got to do is send me a message. I'm 90% sure I already have it charted. It won't take me but a couple of minutes to look over a few things and give you an idea as to what I think fits, especially if I've already done a one-on-one call with you and I kind of have an idea as to what fits for you individually. So, bringing us back here again to Wednesday, May 21, the Wave 4 drop zone targets. And as we went over and over and over this, over and over again, which I'll get to in a couple of minutes as well, again, as long as SPX holds 56.65, there should be nothing to be worried about for the Wave 5 bounce to all-time highs or higher into June, July to produce. And that's where we're at. And as you see here in that email that went out on May 21, the 59.68.61, we'll go over that right here because that 59.68.61 is where you had your Fibonacci spiral perfectly nailed high right there. And as we went down into that 57.67.41, a number of people that were there that knew that we were saying there, okay, that's it. 4 red closes in a row, time to buy the dip. You had Memorial Day weekend, and I cannot remember off the top of my head what was the news that came out after Memorial Day weekend, but you obviously had that 50-point gap up, and we closed up 118 points on the day, and we've never looked back since. And now, in this specific subject only, which I can remove this. This is for me only. And I need to change my font. Apologize for wasting your time, but I'll put this over here because I'm looking at where's the high placing. And again, full moon took place over there over the weekend, July 13th. 6302 looked okay. 6304 within, because that plus or minus 3 trading sessions, so giving it a little bit of an asterisk. But what I saw there on Friday, how we went above that, gapped up above it as well, I am not convinced that the highs are in. Say it very clearly. I am not convinced that the highs are in as we go into the end of the month of July. I am totally not convinced. And what I have now here for myself is an asterisk where I'm putting this as the sequence continues of high, low, with July 13th, the low coming there 6201.59, when you had Jerome Powell being fired, papers being drafted up, 3 days off. And now, again, because this is a measurement, it's an art, 5 days off of that, 63.15.61. I can put that into a number of different ways, but as of right now, I am sticking with 6201.59 until that 6201.59 is broken and I can be told otherwise. As for our range, the whole month has been complete and utter shit. And it's my fault. It's my fault. So those of you who are no longer going to be with us, I wish you the greatest of luck in all of the ventures that you do throughout the remaining portion of your lifetime. This is my fault that we're trading 32, 39, 38, 24, 37, 38, 31, 34, 30. My fault. While we have a plus 16 VIX. So, not really going to go over the spreads, but again, talking about earnings and Netflix and the 12:15, we are going to go over Google and Tesla in a little bit of a minute, and I'm not even brushing on QQQ whatsoever, other than the fact that same with the SPX, with 4 green weeks in a row. You've got 4 green weeks in a row over here on the QQQ. You've got 4 green weeks in a row over here on the IWM, even though neither of the last 2 weeks could close higher than 1 point above. But QQQ 560 is now your spot. Those of you that want to day trade, and this isn't a day trading room, but because we do cater to it and we are pretty fucking good at it, 560 is your QQQ for the time being until it has been proven otherwise. 560 is where you are for your break point to the downside. And as you can clearly see, your lows every single day, even there on Friday, 559.98, just coming just below that 560 point. So enough and on with that, but I want you to remember that on July the 30th is the Fed meeting. Now, on Tuesday, Jerome Powell is going to be speaking before the market opens at 8:30 in the morning. So whether or not he tackles this big fucking orange elephant that's been going after him, nobody knows. Nobody knows whatsoever. He's made a couple of comments that there is no marble floor or fucking canary sanctuary up on the fucking rooftop of the, Fannie Mae building, whatever the fuck they call it. But whether or not he makes any comments towards or about Donald Trump or about these bullshitted rumors that he might be resigning, nobody knows, and he'll be speaking on Tuesday morning. And again, before anybody goes on to this, route about, this guy hates Trump, he hates Trump, I fucking hate all of them. I'll prove it to you right now, because every news venture out there is Epstein, 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 Epstein. Everywhere is Epstein. Everywhere, except for Fox News. They got Obama. So let's throw some Obama in here.
And okay, maybe I'm gay. Maybe my wife really is a man, like all these people say. Maybe her name is Big Mike, and maybe she does have a huge dick. But you know what? It doesn't matter.
So there you go. Again, just to keep everything clear. So again, on these Fibonacci spirals, all right, this is where I learned it from, where it was shared with me, and coming here looking at the December 7th, 2024 highs, which I'm going to reflect back to before I go to the charts here in a second. The next Fibonacci spiral date is on July 28th, 2025, coming up at the end of this month. And how this one has worked has been low, high, low, high, low, high, low, high, low, high. So we should be, from a sequence point of view, expecting to see a low come in on July 28th. Come over onto one from July 16th, 2024. Exactly a year from now, exactly from where we topped out a year from now. And over here on July 28th, 2025, you also have a Fibonacci spiral date. Come back onto the one coming from October 17th of 2024. You had a Fibonacci spiral date on June the 7th. Well, we look back to June the 7th. And where does that tie out to? Right to June 11th, 6059.40. So everything lines up, and very many of you remember 6059.40. We did very fucking well with all of that. But so what I will bring you on to is discussing, we won't go over the martingale because I don't think that a large number of you it actually fits for. But as we've been talking about here, it is now 18 trading sessions. 18. Since we have had a plus 1% day. The last plus 1% day came on the ceasefire after World War III. Now, to put that into context, because we haven't had a streak that long for fucking an exceptional amount of time, we come back to when Donald Trump won the election. And I'll unhide these rows, be able to verify that by going upwards. Donald Trump won the election there on November the 5th. On November the 6th, the market opened up, big gap up, big move up, boom, boom, boom. 58.40.59, our plus 1% level. The Trump train took off, bang, right on up there. We did not get another plus 1% day until here on December 19th. December 19th took place on the day after December 18th. December 18th being the day when we hit that 12,000% SPX 6,000 puts trade. So looking for a minus 1% day before seeing a plus 1% day, very, very prudent to be looking for something like that as we are sitting here going absolutely nowhere. So here is your July. Here's July, the whole month of July. So let's go ahead and take this out and remove the first day of July. You know what? We'll even do that. We'll go into taking out Jobs Friday on July 3rd, July 4th, and we'll move on to after 4th of July. After 4th of July, we've gone nowhere. Nowhere. Absolutely nowhere. We've been banging up at this 62.85, which is plus 30% from the lows over there in April, and we've been hugging and holding above that 62.20, which we've only come down to visit 2 times. The one when I don't remember what it was back there in the beginning of July 7th, but then you had the Trump tirade about firing Powell just last week, where we came down to 62.01 again. So 62.01 is extremely pertinent. And that's what you're going to be looking for. So when you can actually pull your head out of the sand and start thinking, oh, look at this. Full moons. Yes, I have my full moon noted here as a low because of that 62.01. Prove me wrong? I don't think so. 30.62% is where we are coming off of the April lows. Look at it into a little bit of a wider context for those of you who are a little bit tired of the whole day trading thing, would rather go get something out September, December, like a normal human being and just go enjoy your life. Well, still got the same view. 3-3 AB 1-2. Don't know what it is, but we're sticking with the bullish view, which we've been sticking to for a considerable amount of time now. That's 61.19 failing, penny above, 2 pennies above when we went into that into February 19th. 5-year anniversary of COVID, bang, 21.35%, where we spent 23 minutes below minus 20%, and here we are plus 30%. And I'm going to get into that plus 30% in a minute here. Looking at this from, again, a big, broad, wider view, 1,580 points coming off of COVID into January of 2022. Boom. minus 1,327 points coming into your 2022 bottom. Up here into the bounce, 1,116 points, 503 points down, 2,044 points up, 1,312 points down, and here we are up 1,480 points off of that low. The low that I tried to get everybody to buy the dip on back in April, and a lot of people were scared of. Tried to do it again in April when we had the little dip, and again, like you saw in the email about that 57.67 on May 21, looking for that to be a continuation to the upside. Come on to the SPX here from a weekly point of view, and I can get into a little bit of subject matter with this in a second. You've got 4 green weeks in a row. We had 4 over here. That was our big bounce with the big gap up. 1, 2, 3, 4. Then you had that one red week, and that one red week took you where? It took you right down to 57.67.41. We had 6 green weeks in a row coming in here. 1, 2, 3, 4, 5. I'm wrong. It's 5. My bad. My apologies. As we went in here into the COVID top. 3 in a row, 6 in a row, 4 in a row, 6, 4, 3, 5, 9. You can go back all you want. We had 9 coming off of Israel invades Gaza. After Israel invaded Gaza, back on October of 2023, we had 9 green weeks in a row, 1 red week, right there, right in the early part of January, and then another 5 weeks in a row before another red week. You know, I don't need to go over this. You know this already. But the point being, what I wanted to bring out here, is something that I noticed coming off of when, example, like Donald Trump. When Donald Trump won back over here in 2016, he had, and I need to zoom out here a little bit, a 34.77% run before he got a dip. He had a little 11.84% right there. Boom. Right there. 3 days, 4 days, I think it took, before we dropped down there on February 9th. Then we went up there, posted a new all-time high, just fractionally higher than where we were back in January, over here in September, and then again, minus 20%, where we spent 3 minutes on 2 separate days, December 24 and December 6, minus 20%. Well, when Joe Biden won, back over here in 2020, same day when Pfizer came out with their cure for COVID, same day, he had a 34.48% run before he got his correction. His correction was a little bit deeper, 27.54%. His run, a little bit longer, a little bit more than a year, as he went up there to the top of 2022. And now here we are over here with Donald Trump. Donald Trump coming off the April lows. I'm not saying anything other than that, but we've got a 30.62% bounce so far off the April lows. From when Donald Trump won, being over here at 57.83, different story because he already had that dip, and here we are with the bounce. So I'm just pointing this out, is all that I'm doing. But while you're looking at this and you're wondering, what are these lines here? What are these lines that tend to be perfectly lined up? What are these lines? Well, I'll show you what these lines are. What these lines are, the one in green is the Fibonacci extensions coming off of the Great Depression into the dot-com bubble high, into the 2002 lows. 2002, 2009, same lows, off by a couple points. What's this one in yellow? Well, this one here in yellow is the Great Depression bottom, going on to the financial crisis high, which was fractionally higher than the dot-com high, going down to the 2009 lows, which was fractionally lower than the 2002 lows. And where do they line up? 161.8 right here, fractionally into COVID. Right into COVID. Bang. 261.8 right there into the 2022 highs. And then what happened? Bang. And here we are coming very, very near into the 361.8, 63.70, 63.71 and 63.53, and here we are at 63.15. And the one that I've been talking to you about, which I got to go through the Dow Jones and IWM real quick. Dow Jones, I got no changes. I don't have any changes whatsoever. Nothing whatsoever. Triple topping up here, 1, 2, 3, 4, 5 ABC, no change. IWM, Same thing. I got no change. 1, 2, 3, 4. Extended impulsive 5. Do. No change. Nothing to change. Nothing whatsoever. So I bring you back over here onto SPY. And again, I have put my dot for my Fibonacci spiral being on that low. And that is going to need to be broken. So knowing how we have this low here, which is right around 618, I'm going to go ahead and put an alert so that I can be notified when SPY breaks below 618, so that I, being normal Joe taxpayer, don't need to sit there and watch this. I can put on an alert. When you put on an alert, you can put on a play sound, and you can customize your sounds. You can edit your custom sounds, put in whatever you want. I mean, here, I got a good one here. So you can put whatever alert you want, but that's your spot, 618 over there on SPY. So going back into what we've been discussing here, what we have here, and I've mentioned quite a few times, is at 6332, 6332, 6334. It's your 200 extension of your 2022-2023 moves, which again, 2023, July 27th was where we topped out. The 150 extension of what we are looking at here from this last move for this wave 5 coming off of 57.67 that we're calling the wave 4. 1, 2, 3, 4, and then this impulsive 5. 1, 2, 3, 4, 5 is what we're looking at, but we're looking for there to be a top, and the top comes when you get a break below 62.01. Then you can start saying, okay, we finally have a top for what we're still calling the bullish wave 1. And it brings you back into the same place that we are stuck into a nothing world. Above 48.35 has continued to fail other than OPEX Friday. Below 62.20 is never ever seen. In fact, you can barely get below 62.40, which we've mentioned many, many times. So you're in this tight zone with the range being completely and utter shit as you have been sitting here for the better part of how many days now? A month. A month. This week will be a month that we are trading this 28, 39, 32, 39, 38, 39. Can't even get a 40-point range. Barely got a 30-point range there on Friday. And it's not a complaint, but it is something that you need to be very well aware of, because the market isn't always what you want it to be. When the market is tight like this, it's when you got to start adapting. And that was actually why I had up on the screen there about the martingale, because very few people understand how to do regular math when it comes to trading. So anyway, we've got the FOMC meeting coming up in 2 weeks. We've got earnings coming out this week. The earnings big one, where was it? Is the Tesla and Google. So I'll go quick on that. And I've got 2 other videos that you can watch that are in different languages other than mine, because I speak, I don't even know what language you could call it I speak. The 10-year, 4.49. I've had that alert there for the better part of 2 weeks, and we have come right up there and touched it on the 10-year. Haven't broken it, but we have come right up there and touched it. And there is a little bit of a warning sign that you should be issued if we do get a break on the 10-year above that 4.49. You've already had the 30-year above 5. Not seeing anything come out of that as far as, reaction in the market. So bring you on to Google. With Google, I mean, I could sit here and I could move my AB over here onto this chart. It's the exact same move. You got nothing but AB moves, AB moves, AB moves. You could see this as a very complex AB move to the upside, where, again, here you are, you're coming into your trouble zone. Your trouble zone being above 183. Do I suggest that you play any kind of option ahead of the earnings? Absolutely not. But you got to be very well aware of that you have this enormous gap from way back here after they reported earnings last time, where they had their massive gap down of a little bit better than 20 points, which starts right up here at 193. Come on to Netflix. Well, like I said, they're on Netflix, 12.15. Well, you got a little bit better than 12.15. Tesla. I'm pretty fucking good with Tesla. I'm pretty damn good with Tesla. For years, I've been pretty damn good with Tesla. And like I said over there, as we were getting that little dip down there into the upper 280s, It's time to start looking for this to be bouncing here, and you got your bounce back to 313. 313's been holding. I wouldn't suggest playing earnings, but from a bigger, broader, and wider view of this has the opportunity to do good and bad. And this isn't one of those ones that you want to be in front of. You've got big 400 way up in front of you. You got big 400 way up in front of you. You got 313 holding you together. And you've got that humongous 210, 215 down below, ready to support you. You're right in the middle. I would not mess with Tesla. Let it report. Reports on Wednesday. You've got Thursday and Friday that you can do anything that you want to do with it and move on from there. So, again, I bring you back onto the 10-year. Where are we with the 10-year? Yeah, here's the 10-year. So, again, if you want to edit, replace alert. Yeah, replace alert. Change your sounds. Change your sounds. Put whatever you want. You know, you can put the Hawk to a girl.
Hawk to and spit on that thing. You get me?
You can go to your favorite movie.
Rocco! Rocco!
You can go to Robert De Niro for all of you that are big, old 80s gangster fans.
I'm going to say one thing. Fuck Trump.
Like I say, do whatever you want, but whatever it is, make sure that you've got a notification on your side.
It's no longer down with Trump. It's fuck Trump.
So there you go. So you got your earnings coming out this week. Tesla and Alphabet. Jerome Powell's going to be speaking on Tuesday morning, and I have 2 other videos for you in the email that you can go through and watch at your leisure. Again, speaking in similar languages, but like I say, I am not convinced that the top is in. I would be very cautious looking for those couple of pennies that are up above us, 63.34, and those bigger ones I pointed out, which I'll share with you in the email later on. So enjoy yourself. Enjoy your Sunday. Hit them straight if you're playing golf. Put on that suntan lotion if you're at the beach. And if you're having a barbecue, have a beer for me. Enjoy yourselves.
I'm prepared to say that I have a record of over 40 years and that I'm going to beat Joe Biden.